You might have heard of the other slow, gentle giant that's now become like $1 billion plus in value, which is Porter. Porter was, one of many companies in 2015. It even came by our desk. We actually, it got pitched in our old office, and we were confused about, like, I think we were between funds. We couldn't cut a check. We loved Pranav, and then we obviously couldn't partner. Kudos to K Capital, who backed them and waited out patiently. Today, Porter is a unicorn. They just raised a $200 million round led by Kedara and Wellington at somewhere in that billion to $1.2 billion range. Again, had primary and secondary, absorbed about, our guess is about 50 to 80 million in primary, and then 120 to 150 million in secondary. Again, a company that's turned profitable, looking to go public very soon in the next couple of years, been around for 10 years. So obviously there's K Capital, there's Lightrock, which actually publicly said that they got a little bit of a exit here. Peak had a stake there, they exited. So essentially these were three investors who took the money out. That's not a bad chunk of change. At least 120 million is on the lower bound is our estimate, and maybe 150 million on the higher end. And Porter continues to scale intracity logistics for MSMEs. That's their sort of the core business proposition and their mission. And they're trying to expand city coverage. They're doing P2P parcel delivery. They want to invest in tech and ops. Kedara and Wellington. Wellington is usually a public market investor. Kedara is one of the best Indian PE investors. So you can't ask for like better partners to go towards a path to public. So that was the second. Then, of course, the buzz around quick commerce. So we're talking about Zepto. One more $450 million round, this time at close to $7 billion valuation. And if you look back at the papers, it was not too long ago when they raised at $4 billion. So another 40% bump up. And the investors included the giant Californian pension system called CalPERS, General Catalyst, who's already an investor, who has a really large fund. Good Water, an existing investor who has a large fund. Lightspeed, existing investor who also has a large growth fund. So now Zepto is up in its war chest, has close to $900 million according to their own stated press release. And bulk of this round, again, went to primary. 350 to 380 is estimated to have gone in primary. We think about 70 to 800 million went into secondary, giving some early shareholders some liquidity. So clearly everyone knows this crazy battle going on in quick commerce. Blinkit's the leader, Zepto, Instamart, and then of course the long tail of like Big Basket, Amazon, Flipkart Minutes. God knows if Reliance and DMart are getting into this game. But like there's every big format, online or offline, retail player wants a piece of this action. So that's what's happening in this market. Needs to get that capital to be able to build into higher ticket categories like electronics and apparel, build to profitability and get to public sometime soon. So there's been rumors that they'll go public at some point. Let's see when that happens. But essentially, we think the inevitability of the war chest being primarily into primary was always understood. But it's interesting that even in that scale, there's always some secondary. Whirl Invest, which is typically this Belgian consumer healthcare focused investor backed by AB InBev, the founding family, which is Anheuser-Busch, and which is bought into European InBev. So these guys have been in India for a long time. There are co-investors in Purple. They were in Nykaa, I think. A lot of money in India in consumer. They really get consumer. So they seem to have invested 75 million for a minority stake in. So if you've gone to the south, there's an ophthalmology chain, Coimbatore, 25 plus eye hospitals. I've seen them where I grew up in Chennai. So basically in Tamil Nadu, Kerala, Karnataka. And clearly very well run by the founder, Mr. Ram Murthy. And looks like Whirl Invest is close to about a 20% ownership. And clearly when the company is running profitably and bootstrapped, you don't need a whole bunch of primary capital, even if you want to expand, because you know how to do it profitably, which means some of that money has gone into secondaries. And from what little we know, it looks like he's bought the shares from the founder, Mr. Ram Murthy itself. So more greenfield center rollouts, brownfield acquisitions, tech and customer experience upgrades. That seems to be the playbook out here for that large 75 million round. So fascinating that it's a combination of venture and private equity, but it's in that sweet spot of again, a path to profitable and potentially something that can list. Invest also, by the way, was a long-term investor in Su, which was on the Blume podcast, episode 2 of this season. So you should incredibly patient, incredibly long-term kind of consumer investor. So kudos to them for taking another big bet. Then there was Cuckoo FM, which is riding both the breakout in short-form content and is obviously getting some great revenue traction. From what we've gleaned, Granite Asia, which was formerly GGV Capital, and Vertex Growth Fund, and a couple of others, Crafton, IFC, Paramark, Tribe India, Bitcraft, all seem to be participating. Some of them are existing investors, but Granite's the new one. And it's one of the biggest investments in the new avatar in India. 85 million Series C. The valuation is supposedly somewhere between 500 and 550 million. And of that, 50 is primary, 35 is secondary. So once again, you'll see this trend that as the company, $500 million in the case of Cuckoo, $1 billion in the case of Porter, $7 billion in the case of Zepto, even if there is a lot of use for primary capital. And if you go by the World Investor case, 75 million for 20% is approximately 350. In that case, of course, the founder was selling. In all these cases, there will be an investor who's been 7, 8, 10 years, will take some capital off the table. And the implicit belief of the incoming investors that this potentially can go to public. And that's what we're seeing here. Cuckoo FM, of course, wants to fund AI data infrastructure, bring celebrities and creators, build more original IP, scale the vernacular audio, vertical microdrama. So a lot of ambition there. It's an interesting time for entertainment plays to suddenly start looking like they can potentially go public or become a unicorn. We haven't seen too many after Share Chat, so let's see how that plays out. The other giant transaction, which has an interesting nuance, is what you might have just read recently. PhonePe's $600 million sale, which is not really a primary issuance, it was all secondary, and General Atlantic bought into it. So the implied valuation seems to be about $14.5 billion. The last time General Atlantic led a $1 billion round was closer to $10-12 billion valuation range. So there's again a premium from the time they entered to the last round to now. It looks like we're price setting for a imminent IPO once again. General Atlantic has now put $1.15 billion into PhonePe since 2023. 350 million in Jan 23, 100 million in April 23, 100 in May 23, now 600 million. GA's single largest position. This is even bigger than what they played in geo platforms in 2020 at the height of the boom, where they put 870 million. The stake seems to have doubled, from 4.5% to 9% approximately. What enabled this deal? So one is, of course, the market loves it because suddenly you've created a valuation benchmark, which is non-trivial, at a $14.5 billion price point. So it looks like we're finding a listing price in the case of PhonePe. The second is this seems to be like a pre-IPO of employee stakes, which is through stock options. And you get them to exercise, pay the taxes now before the listing. And so you enable liquidity and you ensure that not too much of that float post-IPO starts seeing a whole bunch of churn because people are desperate to get some liquidity. So essentially you've locked up a lot of the likely employee liquidity that would happen post-IPO. So I think this is a very, very interesting, nuanced move from the Indian context, and especially the ticket size is staggering, right? 600 million is not a small chunk of change. It's almost 5,000 crores now. And so that's the kind of liquidity that PhonePe team and employees are going to see, which is fantastic for the ecosystem as well. Finally, I think that kind of summarizes, what we saw in the secondary market. Look at the variety and diversity of secondaries that we're beginning to see. Single asset in all of these cases. No portfolio ones to report. They don't get disclosed that easily as well, but we've been covering those as well. And it is just inevitable that as long as the IPO window is open, you're going to see a lot more of these path to IPO secondaries inevitably in the market. On that note, let's wrap up by looking at what happened in some of the current IPO issuances where there's been some recently disclosed secondary action. So Lenskart, for folks who remember, the flavor of the day and the week, 67,000 market cap, a lot of debate on whether that's a great price, not a great price. subscribed on day one. It's going to hopefully have like a good run. I'm a huge fan. I use Lenskart glasses. I'm not an investor though, sadly. Recently announced that Radhakishan Damani, the legend behind DMart, actually picked up about 190 crores along with SBI Mutual Fund in a pre-IPO deal. And at the upper bound of the value, the IPO valuation, 67,000 crores. To put that in perspective, if you look at what the Abu Dhabi Investment Authority had picked up a few years ago, that was closer to like 42,000 crores, about 5 billion at that point in time. And today we're closer to like a 50% premium to that, more like 7.5 billion is where the current transaction is happening. Not a bad return for like 2 years of hold for the folks at Abu Dhabi Investment Authority. So again, the idea was to remind you that if you see a transaction 2-3 years ago, it's basically playing for this, and it's actually played out fairly well in terms of at least paper gains. Someone like the ADIA guys are super long-term investors, so I don't think they're looking to sell and cash in, but just on paper gains, that's a 20+% IRR, which is fantastic on that scale. To have $500 million compounding at 20% is just amazing. The other sort of fun anecdote is we looked at companies that are going public and looked at the DRHP filings. Curiously, that Boat, Meesho were the other companies that were actually filed for public and will probably go public very soon. And they actually had no secondaries in the last 2 years. So also, there's no formula around this, like everything in life. But there's the broad spectrum. You'll see companies where there's no secondaries, and there's companies where there's hundreds of millions of dollars of secondaries. And today in the first segment, we covered the whole range of that, anywhere between $15 million to 30 to 50 to 100 million of secondary. So this is why secondaries are interesting, and we cover this as a segment. My colleague Vikram talks about what's happening on the IPO front. That's a different show altogether. But when you actually look at the build up towards that, I get a lot of price action and dollar action on the path to an IPO, which I like to cover in the secondaries. So look, I think it's been a busy year. We started this entire segment of M&As and secondaries in the early part of the year. It's been exciting watching this for almost 6 months now. We have 2 more months to round off the year, and the action doesn't seem to let up. Big IPOs in the offing, and that means there's a trickle-down effect on these secondary action. It gives confidence. And similarly, once you go public, there's a lot of cachet and currency to be able to do M&A. And so the M&A meters will also keep running because these companies are now cash rich and stock rich in their ability to keep acquiring. So I think this is all a coming of age of Indian exits. And that's what the whole purpose of the show was, to be able to highlight that these are not one-offs. There is a trickle-down effect. There is a virtuous cycle in play. And we're happy to cover these monthly segments to give you an idea of how much that's happening. And for whether you're a private investor, whether you're a growth investor who's looking to buy into mature assets, or whether you're a public investor seeing what is the action in private assets in public, I'm hoping what we do here at Blume and bring these exit commentaries to you are valuable for all of you. Thanks, and I hope you enjoyed the October session.